we have talked about the definitions of revenues. And then what is the principle for revenue recognition? So the principle for revenue recognition is companies recognize revenue in the accounting period when performance obligation is satisfied for the amount that reflects the consideration that the company receives or expects to receive in exchange for this goods or service. So there are two key parts for this principle. The first key part is related to when. So when do we recognize revenue? And we recognize revenue when the performance obligation is satisfied. So what is performance obligation? We're going to talk about it in a minute. But just here, you just need to know when do we recognize revenue? We recognize it when performance obligation is satisfied. And then the second key part of this definition is for what amount do we recognize revenue? So how much revenue do we need to recognize? So the amount, that is the second key part. We recognize it for the amount that reflects the consideration that the company receives or expect to receive in exchange for those goods or service. So that is the second key part of principle for revenue recognition.